Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, April 13th. Hope you guys had a wonderful, hopefully a long weekend for you guys, Easter weekend. And let's jump right into it. We actually got kind of a short one today. We don't have any economic data to present. We did have CPI that was released last Friday, even though the markets were closed. CPI actually was down for the down on there, so that was good news for us. We expect that actually to come down during this coronavirus as basically people aren't spending and stuff, so which will drive our prices. But let's kind of jump ahead. Headline news: stocks are down this morning. We are beginning the uh, second quarter earnings reports, so of course, they're kind of spooked about what's gonna come out on these corporate earnings here. So it'll be interesting to see what plays out this week. I believe we get banks earnings coming out this week. So be prepared for some volatility on the stock market. So of course they got pretty much they already have a pessimistic view, but there could be some surprises in there. As if we recall, the coronavirus outbreak didn't really happen until last maybe 2 weeks of the first quarter here. So you also have like two and a half months basically prior to that of numbers. So we'll see if they got wiped out in those 2 weeks, or if we will see more of that. I think we'll personally I think we'll see more of that in second quarter, even though I think we'll have a little bit of a hit in the first quarter, but I think we'll see the bigger impact obviously in the second quarter. Let's kind of jump ahead here. There's also a agreement between the U.S., OPEC, and Russia. They're going to cut back about 9.7 million barrels of oil a day, and so because it just got there was a price war between OPEC and Russia, and it just got kind of out of hand. It was great for us consumers as we can go to the gas pumps and see a much lower gas prices. But unfortunately, with this current environment, we can't really drive anywhere. So it doesn't really do us a whole lot of good if we're not able to utilize it. So they're looking at doing some major cutbacks on there to drive the oil prices up. Also, we had this is kind of a quiet one. It's not being mentioned much on the news, but there was an announcement by the Bank of England that they will be to help them to go work their way through the stimulus of the this pandemic. They will go ahead and start printing money, which is can be a concern because other countries may follow suit. It can potentially create hyperinflation out there. So there's a lot of negatives behind it. So something we'll have to kind of keep our eyes on, but it hasn't got a lot of much attention in the media. But this was just announced over the weekend here by the Bank of England. Let's see how this is playing on the bond market. Bond market is down about 22 basis points, so we would have kind of a price change for the worst. So pricing on mortgage rates won't be as good as what we saw on Friday, so it'll be down a little bit on Friday. But we're still kind of in the sideways pattern. We'll have to kind of wait to see later in the day how this plays out as the Fed's been kind of purchasing mortgage-backed securities. We'll see if later in the day if that may improve or not. But we've been kind of going for the last almost 2 weeks. We've been kind of going this sideways pattern here, which is a good sign for us that we're kind of just going. We don't want to go up too high because, as I said, if you've been watching my reports, lenders have been struggling with margin calls when we've been having these sharp increases. They've been hit with margin calls. There's a whole lot of items out there that are hurting lenders right now, and one of the bigger ones right now is margin calls. Another item is servicing. There's a lot of concern for servicing. They're taking a huge cut, and they're not getting any help from the FHFA. They're kind of leaving them out to dry, so to speak. So we're a lot of people in the industry are trying to push the FHFA to create some liquidity in the servicing side of things because what happens is the with the whole forbearance that the government, the FHFA, this is actually planned by the FHFA, that they want to go ahead and create this forbearance plan. And then what happens is when these customers or borrowers are not making mortgage payments or are not making mortgage payments, the services are still obligated to make the payments to the investor. So when you have such a large amount of people uh, not paying in on a monthly basis, this could easily come into billions of dollars here and leaving a lot of companies high and dry, so to speak. So, and Chris, we need that liquidity in there to help those folks out to try to create, especially when it's the government who are creating these programs and not helping those in the process. They're kind of leaving those people out to basically to die, unfortunately. So, There's a big push by the mortgage industry to try to get the FHFA to step in there and create these liquidity, as there was talk previously, and now all of a sudden they're kind of backing out a little bit. And uh, that's one of the big issues that we're dealing with right now. And even with qualifying right now, forbearance is a big thing right now with the qualifying and everything else with the job losses and furloughs and stuff like that. So lenders are going ahead and checking those pretty uh, heavily on those. So they're doing whatever they can to make sure that people are still working or not having cut back hours, or that they're qualified based on the time that they're ready to fund a loan. So just be prepared for a lot of if you're in a process, just be prepared for these type of hurdles you're going to have to go through in the meantime. All right, so mortgage rates, go step backwards. Mortgage rates are down a little bit today compared to what we left off on Friday, as we're currently down 22 basis points. This could potentially change later in the day as the Fed, starts buying more mortgage-backed securities. They've been averaging between 20, 25 million, or yeah, I think 25 million or billion worth of mortgage million, I think it is, mortgage-backed securities a day so far. And let's see how yields are up slightly. They're up at 0.73. They got some room here as this has been coming down the 25-day moving average. Now this is at just hair under point 0.8, but we're just a hair just under 0.73 currently. All right, so that's pretty much the wrap for the day. If you guys are in California looking to buy or refinance, please feel free to reach out. We'd love to be able to talk to you guys and help you navigate through these trying times, these uncertain times right now. We've been able to help some other clients out and get them funded and still give them good rates and everything. So if you guys are interested, would like to some assistance, please direct message me or email me. And email will be the quickest turnaround time. And my information is in red there at the very bottom. So if you guys need any assistance, would like some assistance, please reach out. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow's video. Bye bye.